Good afternoon, folks. Ryan Gonzales here with Becker Properties. I'm joined with my co-host, Carlos Cruz, eMortgage Capital, and Mr. Jose Rios. Jose works for tax strategy, right? Tax insurance strategy. He's a CPA. And you've been doing this for, 9 years now, you said?
I've been doing this for 9 years, going on 10 years.
And you're local here in San Antonio?
Local here in San Antonio, 8400 Northeast, Loop 410, right next to everybody's favorite bar, McIntyre's, and everybody's favorite restaurant, Papa Do's.
Papa Do's.
So come see me, and I'll take you to go have a beer and some oysters.
Oh, right? I like this guy.
That's a win.
Yeah.
So I wanted to bring Jose in here to talk about the big, beautiful bill that just passed. There's a lot of new tax strategies for investors and homeowners. And so I want to jump right into it. What are the newest things that pop off your head for investors and real estate agents, and how can this impact people now and also later in the future?
You know, that's a great question, Ryan. And first and foremost, thank you guys for having me here. I plan on dropping some gems for you guys to help you guys have a massive financial breakthrough, right? So
we're all in for that.
Yeah, so big is big, but massive is massive, right? So let's jump right into it. So the question is, how will the new bill impact real estate investors? Well, the bill reshapes deductions and bonus depreciation timelines. So typically, whenever you get bonus depreciation, you only get 60% of it at the moment, right? Well, you get 100%. I'm sorry, I correct myself. You get 100% at the moment. People want to know, what is bonus depreciation, right? So say, for example, you buy a house that you're going to rent out, right? Or you're buying a fixer-upper, right? So anything outside of the foundation that you're investing into the home, right? For example, cabinets, landscaping, kitchen, countertops, appliances, right? Right now, you can depreciate 100% of that. Starting in at December 31st, 2025, you're no longer going to be able to take, after December 31st, 2025, you will no longer be able to take the 100% depreciation. That's going to drop 40%. So
That's huge,
for every $100, for every $1,000, it's going to drop $400, right?
Right.
And when we're speaking of terms of houses, right, we're speaking of hundreds and thousands of dollars, sometimes even millions of dollars, right? And you know the reason why this is super important. Say for example, your adjusted gross income is $1 million, but you're going to get taxed at $1 million, right? If you make $1 million, but say you drop $600,000 into appliances, landscaping, just, making your fixer-upper seem more appealing, making your rental seem more appealing, right? More curb appeal, as they say, right? So now you could, as of right now, if you invest $600,000, your income gets dropped to $400,000. So you're only taxed at $400,000, which is a massive financial breakthrough for the client, because now they're at a lower adjusted gross income, so their tax liability is a lot lower.
Right.
And this is for flips and also rental properties, right? So either one.
And Airbnbs.
Flips, rental properties, Airbnb, everything that is not your actual house that you're living in.
So any investment then?
Correct.
More or less. Okay.
Because the house that you're living in it's an investment to us, right? But it's not an investment where hey, I'm investing this money to rent this out to make X, Y, Z, right?
Okay, I got a caveat question then.
Yeah.
So it goes to something we were talking about earlier. So let's say I've got a primary residence, but I build an accessory dwelling and I choose to rent that out short term. Is that something that I could put into an LLC as a business?
That's a bonus depreciation.
So I could be able to do that.
Correct. I got one other loophole for you.
Okay.
All right. Say, for example.
I like that nugget.
Yeah. Say, for example, you have a huge ass house, right?
Okay.
And you want to rent a couple bedrooms out of your house, right? Take out an LLC, right? Like Becker Rentals or whatever it's called, right? Jose Rentals, right? And whenever you take out that LLC, because you're renting out a room in your house, now you can bonus depreciate any of the things any of the landscaping, any of the cabinetry, any of the work that you're doing to your house.
Because it's part of what's being used for that tenant.
Correct. Yep.
That's awesome. Right
so
there,
those
man.
are some loopholes to know. But right, if you don't know what you don't know, right? So we don't know what we don't know.
I
So
bet there's a lot of people that don't know that one.
you know what? You'd be surprised. There's a lot of people in real estate, and it's a lot of information to collect, right? I'm kind of like Cat Williams. I just sit back and collect information, right?
But it goes back to the point I think that we've talked about a lot since we started doing these podcasts, which is I can't be an expert in everything.
Correct.
You can't be. It's just not realistic.
Correct.
You know, I can do mortgages. I've got 165 lenders. I don't even know what they all do, but I can
Correct.
send them a question and ask them all at once. You've got how many years of experience now in real estate?
12, yeah.
Wow.
So you've been doing both residential, you've been doing first-time buyers, now you're doing repeat buyers, you've done luxury, I think the only thing you haven't done is probably farm and ranch.
Yeah, correct.
Yeah, you've done even commercial.
Nice.
But again, those tax situations that can make a deal or break a deal, that's why we got to call you.
Correct. And I tell everybody, before you do something where you're going to invest in a property like that, right, like a rental or a fixer-upper, always consult with your CPA or your tax strategist ahead of time to know if it's going to make sense for you to do it, right? Especially with Airbnbs. Like a lot of people think, I have an Airbnb, I made $100,000, and at the end of the year when they get that 1099, they're like, shoot, like that's $100,000 added onto my W-2 that I worked, but they didn't make any remodelations. You see, sometimes you make enough money where you got to spend some money, right, to clear out that money, so that way you don't have a high tax liability. And it's important because it's a trend right now. A lot of people are turning their houses into Airbnbs, buying that secondary home.
Right.
Right. Or I was at the gym this morning at Lifetime, and this guy heard me talking to my wife, telling him I'm going to be on a podcast, this and that. And I was being kind of nosy. I saw like his phone, and he had an Airbnb like thing, like he was looking at his property. I'm like, oh, you do Airbnbs? He's like, yeah, I got like 3 of them. I'm like, do you have an LLC for your Airbnb? He's like, no, I don't. I'm like, did you get a 1099 last year for it? And he's like, yeah. I'm like, bro, you need to get an LLC, open up a bank account.
For each one, right?
Well, I would say for each one, because now you could spread the
liability and
the losses
and
and the deductions into each one. Because say, for example, you have 4 properties under one Airbnb. The IRS is going to be like, well, shit, like this guy is 140. This guy expensed 140K. It looks more believable when you spread it out into 3, 50K here, 40K here, another 40K here. You know what I mean?
That makes sense.
Yeah, it's just because the thing is, whenever you open up a LLC or a DBA or you open up a business, you could take a loss for the first 3 years. Then after that, the IRS is going to be like, well, why the hell are you still
running in business?
Like, it's like, why are you still selling tacos if you're losing?
Right.
Why do you still, why you still have a restaurant if you're not making money after 3 years? Close that down. You know what I mean?
That's one of the coolest things that I've heard with business owners and business people or small businesses, how you can take a loss those first 3 years. That's really cool.
And then change the industry. And then take another loss for the next 3 years.
Yeah.
Right?
There's a lot of strategies that people just are unaware of. I mean, we talk about, especially after COVID, so many people decided to find ways to get out of whatever business they were doing and start a side hustle. And now that side hustle is making money, legitimate money, but so many of them have very poor tax strategies, CPA strategies.
Definitely.
I did, without getting into the personals, I did a loan for a young lady that opened up a OnlyFans account.
Okay.
And she was making almost $500,000 a year.
Nice.
But when she did that, she met with her tax planner, her financial investor. This lady is worth a little over $1.5 million now.
Hey, we don't judge.
But she's she's 28 years old and she's about to retire.
Correct.
How does she know how to do that, though?
She met with a CPA, she met with a financial planner, and she met with people that were the experts.
Yeah. She probably saw her earnings the first couple months.
And then realized, I don't know what to do with this money.
Because you're straight 1099 when you're OnlyFans, right? Or like you're in the entertainment industry, should we say, right?
Right.
You're 1099, so all that money it's not taxed when you get paid, but you're going to owe the taxes on it, right? And it's good to get with the CPA or a tax strategist so you can front load your IRS account with money, and then whatever we save you at the end of the year, they just shoot it right back to you, basically.
Yeah, it's interesting because my CPA set me up where my LLC, I yet to follow through with the strategy, but my LLC will get paid by my business, and then my LLC will give me a salary.
Correct.
And he's mitigating some of those expenses through that and then paying my bills. I just am poor at listening to him.
It's all
so
good.
it's my fault.
It's all good. You know, at least you know what the game plan is.
Yeah,
Right?
I know, but it's interesting because when you do execute a plan that's well thought out, man, the savings is huge.
Correct.
Because when I followed his instructions the first couple of years, my tax bill went significantly down.
Correct.
And it's legal. It's legitimate.
Yep.
There's nothing unethical about it if it's written into law.
Yeah. Hey, if Trump could get away with, not paying anything on his taxes, why can't we? You know what I mean? And I love Trump.
It's just business.
It's
just business.
So what you want to do is you want to turn it into an S corp, right?
Depending on the size, right?
Depending on the size, right? And the reason why you want to turn it into an S corp is that S corp, out of that S corp, say you make 100,000, right? The S corp makes 100,000. We're gonna use whole numbers just for example, right? You could pay yourself out of that S corp 60,000 in salary, right? Now a K1 is issued to you, right? So you're not getting taxed on the S corp's not getting taxed on 100,000, and now you're only getting taxed on 40,000 because that's a dollar for dollar tax deduction, basically. So it's important that once you grow big enough that you have an S corp, and then you work out.
I got a question for you.
Yeah.
So that's a really good question, though. Grow big enough. So if Ryan's earnings, I'm going to use Ryan. So Ryan's earnings are in year one as a realtor, let's say 30 grand.
Okay.
Maybe he does the LLC in the beginning. Or
Correct.
maybe he doesn't, he just does sole proprietor.
Yeah, he could do a DBA.
But
also.
now let's say he's making $250,000 a year.
Correct.
At that point, when should he have gone to S Corp? At 100, 150, 200?
I would say once you make over $180,000 to $200,000, turn it into an S corp. Pay yourself a set salary, so that way your business is not in the books for that much money, right? Because that K1 is like the W-2 for the S corp.
Got it. That's a really good way to look at it.
Yeah. So you know how we get a W, when I used to work at Nationwide
Yeah.
Insurance, they gave me a W-2, right? So a K1 is the equivalent to a W-2. The S corp is going to be filed on a 1065. That's an S corp tax file, right? The S corp is going to show what the gross distributions were to their employees, right? Now you're paying yourself. So say it's $100,000 that the company made, you paid yourself 60. They're only in the books for 40, right?
So I just want to make sure I'm understanding this. So if I make 200 grand and I don't have an S corp and I just go sole proprietor, my tax bill might be X, okay?
Correct.
But if I have an S corp and I pay myself a salary of, let's say, 100,
Correct.
and the S corp keeps 100, you're saying that the combined tax liability is less than being the sole proprietor?
Correct, because I could write off the losses. You can't write off as much losses on an S corp unless you issue a K1, right? Because the K1 is what you're going to use to
So I can
file your-
expense that income.
Yeah,
and the combined taxes
Correct.
between Carlos and his K1 and Carlos and the S corp is going to still be less
Correct.
than
correct.
being Carlos'
'Cause
sole proprietor.
With the 1065, you can expense like mileage, deductions, contract labor, utilities, right? Because that S corp is going to be in the books for what it made minus for what it paid.
Yeah, because my tax guy was like, "Are you going to have employees?" And I said, "No." I said, "But I will have contract labor." He goes, "Are you going to plan on issuing a 1099?" I said, "Yes." He goes, "You have to have the business.
Yeah.
That's the only way you can issue."
Correct. And the reason why, once that S corp issues you the K1, that K1, so whenever you have an S corp, it's a separate tax file. It's an S corp tax file.
How is the S corp different than the LLC?
So an S corp means you have shareholders. That's why the S and S corp, that's what the S and S corp stands for. LLC is just like one person.
Okay.
Basically.
Okay.
Right. But like, and you could work it like this, right? You could give yourself 99% of the shareholder, and you could put your wife as 1% of the shareholder.
Oh,
right?
and therefore you have the two.
Yeah,
Okay,
the two.
multiple. Okay.
Yeah. Right.
And that's more beneficial than just going straight LLC
Correct. Because
After that,
after you
180K.
hit that threshold.
after. Okay.
Yeah. Because whenever the S corp, whenever the K1's issued from the S corp, the K1's used for your personal taxes. Now because you're a K1, which means like you're self-employed. Now we could go to the distance on the write-offs. I could turn that shit into gold real quick. You know what I mean? I say it like this: I could take it from owing to glowing. You know?
I get you.
So,
I like that.
yeah,
That's awesome. That's really awesome.
for sure.
So the S corp is still going to owe some sort of taxes, right, on its end?
No, the S corp is just going to be in the books for that amount.
Okay.
So the S corp never owes. The S corp is just reporting what they made.
But they can't write off anything. They can't expense anything.
They can't expense anything because it's just income and then what you pay to your employees,
Gotcha.
basically.
Okay. Interesting.
Yep.
That's good, man. It's really good to know.
Well, again, it goes back to, okay, so here's a good one. Somebody wants to get into a business. They start a business. Let's say that their business is making some money.
Okay.
When should they meet with you? Is it to start at the beginning or after they've made a little bit of money?
You should meet with me as soon as you have that idea.
Okay.
As soon as you say, you know what? As soon as you go, because to get a DBA,
I want to do this.
Yeah. As soon as you get, it only costs $25 to get a DBA at the courthouse. Mm-hmm. With the DBA, you go open up a bank account, right? So say you're a W-2 employee, right? Whenever you get paid, you want to transfer money into your business bank account, and you want to spend all the money out of your business bank account, right? Even if you take a trip to Vegas, so I don't longer throw birthday parties, right? What I do is I take a couple friends to Vegas. We talk about business. I do a couple tax files while I'm there, of course, because I got my laptop.
Record 10 minutes.
And then everything that I do is a write-off. My dinner at the Bacchanal buffet is a write-off. Of course, my gambling addiction is not a write-off, but everything else.
Well, I thought gambling was still a deduction.
Well, no, they're doing away.
They're getting rid of that next year.
Because there's too many degenerates gambling. You know what I mean? So.
And it was only if you claim your winnings, right? You can deduct.
You have to
your
claim
losses.
winnings and claim losses.
Correct.
But there's a lot more losing, probably.
Yeah.
And the thing is,
Hence the reason it's Vegas.
When you
not a
win
bad
over
idea.
$12.50 on a slot, it's a hand pay.
Yeah, hand pay.
So they pay you with the 1099 or 1099 miscellaneous, right? Or a W2G, which is
so
the
bad at the
gambling.
slots. I've only done that once.
Yeah, I like slots. Well, my game is craps and roulette. So
Yeah, I'll be on the craps table for sure.
We can talk Vegas all day long.
yeah, for sure. I'm getting goosebumps just thinking about it. But yeah, so there's a lot of other bills, a 45L, energy efficient bill. Like, you want to make sure that like right now, solar panels and like backup battery units. You know how people own Teslas and they have that. So one of those, like, you don't have to have solar panels, but if you install one of those, I forgot what it's called, like a backup battery unit where you could charge your Tesla in your house. That's an energy efficient improvement. So now you can take the credit for that. The credit for any energy efficient improvement, it's anywhere from $6,500 to $10,000.
Is that going away this year?
It's not up. It hasn't been up but I wouldn't be surprised because the IRS right now is kind of like trying to hold on to as much money as they can. So they usually do that by changing laws where we get less and they keep more, right? But we got to play their game too. That's why it's important to open up multiple LLCs so you can spread that loss.
What I think you said earlier is something that I think is going to blow a lot of people away is even if you have a W-2 income, you should still open a DBA and you should still open a business bank account. Nobody's ever told me that.
Yeah, because you could go tax exempt on your W-2, right? So so I've been in commission all my life, right?
Right.
So this is the way I learned it, right? When I was at Nationwide, I made back in 2013, I made my first 100K at 25 years old. But I was like, shoot, I'm paying I still owe.
Oh, yeah.
Right? I'm still paying
you
back
owe a lot.
four or five grand. I mean, at that age, I'm spending my money at the bars, going out, and all that.
But half that stuff is generating business, right?
Correct.
I mean, I can go have a beer with some buddies and somebody hears me talk about a mortgage.
And they come in.
Now somebody asks me, hey, I want to buy a house.
Yeah. It's, networking is important. So what I did was I was like, man, I do not want to owe ever again. So what I did, that's when I got into doing taxes, right? And I was like, okay, so if I open up an LLC, that 100K, if I spent 40K on my business, now I'm only getting taxed at 60K. So now I could go tax exempt and keep all my commissions. So that way I don't have to owe, I get all my paycheck from here and this business is building. once this business phases out in 3 years, I'll just open up another LLC.
And you're showing a loss on the business?
And I'm
or
showing a loss on the business. You know what I mean?
I like that.
So it's
Look, again, it goes back to something that we've already said, I think, 2 or 3 times, and that's reducing your tax footprint.
correct.
Is not illegal.
Nope.
It's not unethical. It's something that needs to happen because at the end of the day, we all pay a ton in taxes.
Yep.
Whether it's sales tax, whether it's property tax, whether it's income tax, we're getting taxed so much it's gross. And people forget that there are ways to minimize that pain.
Correct.
I want to ask number 3, Ryan, the question regarding the real estate professional status.
Yeah. What does it qualify, or what does it take to qualify for a real estate professional status?
So you got to work at least 750 hours a year. And more than half of your working time has to be in real estate activities. So
So this is specifically for real estate agents or investors or both?
for sure, for real estate agents, investors, anything industry related, right? As long as, and what, like 750 divided by 365, that's like 2 hours, 2.5 hours a day, right? So as long as you're talking about driving to properties, showing properties, doing open houses, now you qualify for deductions as a real estate agent, right? And this benefits married couples a lot because say your wife's a nurse and she makes $100,000 and it's your first year in real estate, right? And you don't sell shit, right? But you've been spending at least 2 hours a day.
That business is really losing money.
Yeah.
The mileage,
Yeah.
the car insurance, the meals, the lunches, the drinks.
So what I'm hearing is have your wife buy you a Mercedes.
Correct. Yeah. You know, and so it now because you're actively that qualifies to be actively participating as a real estate agent, right?
Now that means you still have to be licensed, though, right?
Correct,
Yeah. You
correct,
still have to
correct.
be a legitimate realtor
Correct. And you can even be an
licensed.
apartment locator. You know what I mean?
But you still had to get the education,
Correct.
to be licensed.
Yep.
You had to make the initial investment.
Right.
You really do lose in your first year a lot of the time.
You really do.
And
I've only met one agent that nailed
it.
it in the first year, and that's in 13 years of doing this.
Yeah, it's not very common for sure. I had a question about that.
Make it 2, Philip.
Philip, yeah. So, being a real estate professional, is there a way to track your hours so that, like,
I do know that there's one app that you can use that when you start your workday, you open up the app and you set your schedule in the app, and it will track it'll GPS track if you're driving.
It's called Stride.
I've heard
Is that the one?
I've heard
Yeah,
of that.
it's called Stride. It tracks your mileage.
Do you have to track your hours in a situation like this?
I'm going to be honest, you don't. It's not like the IRS is going to ask you for a time card.
right.
You know what I
Yeah,
mean?
yeah.
They're like,
Well, I wouldn't put more than 24 hours in a day.
correct, correct. You know what I mean? But you know what?
Just a thought.
I would. You can even go this route. You know, you can ask ChatGPT to make you a time log, and you could just start your time, and then.
Well, that's
you could
cool.
just-
Yeah, that's a good
You
tool.
know, they just want paper trail, and I'm gonna be honest. Like only like 4% of Americans get audited, and when they get audited, all they want to see is a paper trail. They want to see that you respond back, because if you don't, they're like, well, shit, this guy's lying about something, right? So people are really afraid of audits.
I've been audited once.
Yeah.
A company that I had gone to, I had totally forgotten. They had sent me.
A 1099.
No, they sent me a 1099, and they also sent me a check for my IRS for my 401k that
Oh, 1099R.
I overpaid on my 401.
Yeah.
Well, I just cashed it. I didn't know. I wasn't thinking about it.
Correct.
And like 3 years later, I get a letter saying you're being audited. Oh man, when they said you owe X, I just wrote a check for X. I'm like, I don't want to deal with it.
Yeah, so let me tell you what we could have done for you, right? Because what happened is the IRS knows everybody that issued you a form, like a W-2, 1099. So there's people that omit information. The IRS, they know everything, right?
Yeah.
So what they did was they send you a letter saying, hey, we saw that you got distributed this amount of money, a 1099-R, but it wasn't reported on your taxes. Now what they do is they add that, even though they paid you out already, they add that back to your taxes, right? And that
Plus all the penalties for those
and it
years.
makes your income go up, because whenever you take out money
Changes
from
your tax bracket.
Yeah, so whenever you take out money from your 401k, say you make $100,000 and you take out $25,000, now you're getting taxed at $125,000. So people think like, so you got to be careful when you take out money from a 401k because it's actually income added on. Like you could go make.
I heard that's the worst thing.
Yeah, you could make 50,000 last year, and say you leave that job and you had 300,000 in your 401k. You took all of that out. Now you're getting taxed at 300,000 the next year because it's added to your AGI
as income.
So what we do in that situation is, in your situation, I would have looked at your file.
You have to amend, right?
I would have amended. I would have added it back on, but I would have expensed more on your LLC to offset that, basically.
Again, when you're a kid, I think I was 28 years old, and I get a tax letter from the IRS saying
like,
you're being audited.
I'm just gonna get it.
You don't know hablo inglés? I'm writing a check. I mean, I ain't dealing with it. That scared the Jesus out of me.
Correct.
But again, as you get older, you realize that it's not a panic moment. It is talk to your CPA,
correct.
Talk to your realtor, talk to your lender, because at the end of the day, one of us might know a little bit more than that person that's just never dealt with it.
Correct. And two things you're going to do. You're either going to panic or pivot, right? I'd rather pivot my energy to things that could change my outcome, right?
That's a good point.
I like that.
So we can definitely, for example, I had a client last week who I do a lot of taxes for the Wyndham timeshares. It's a high earning industry.
Mm-hmm.
And this guy's like, dude, I heard a lot of good things about you. I've had paid on time to the IRS $60K each year, over $60 to $100K each year. Well, I went and amended his taxes, and I dropped it down to like him only owing like $8K for each year.
Oh, nice.
So because he already paid the IRS, they're shooting him back that money.
Yep.
You know what I mean? So I have a client, I call it a private client. They made over like $3 million. They were gonna owe $700,000. Isn't that sick? You make $3 million, and your tax liability is $700,000.
A third of your income.
Right? Because of the tax strategies that I gave her last year. And I'm like, yo, go open up a couple LLCs. Make sure you have a bank account for every LLC. Make sure your shop is depositing. Make sure your business is depositing, transferring money into each LLC and spend money out of each LLC. So that way we're spreading the losses around. Well, I dropped her down from $700K to only owing like $32,000. You know what I mean? And she was like, "Oh my gosh!" Like, she wanted to cry.
That's crazy, man. That's
and it's because
awesome.
it sucks. Like, and it was her first year making that much money. So imagine having to fork over $700,000, dude. That's a, I'm like, I go, if that's the case, go buy a rental, and spend $500K on it. Go do, you know what I mean? Now at least you're keeping something that's yours.
So take that $700K that you would have paid the IRS and go buy a rental. That's brilliant.
Yeah.
So this is why you hear people doing stuff like that, right? They buy maybe a boat or a new car or a rental or something like that.
Millionaires are never millionaires. What millionaires do is they open up businesses and they have their money in those businesses, right? They run out of cash, they just liquidate their businesses. You know what I mean? So like, it's smart. You never want to have. They
can borrow against their businesses
too.
So they're not actually.
Here's a question, and something. This has been something that's been popping up in my head over the last couple of years. So Ryan and I bought several properties together. We renovated them, and we made the mistake of selling them when we should have, because I was not aware of certain products that were out there. What we should have done is taken a cash out against that, and then let's say we bought a house for 100.
Okay.
Let's say we put 50 in.
Okay.
So we're all in at 150. And we turn around and now it's appraised at 250.
Okay.
I can do a loan at 80% of that value. So what is that? 160 and 40, that's 200. So I can do a loan at 200. It pays off the 150. Correct. And it still gives us 50 grand.
Yep.
And that 50 grand of equity is still there in the house. So now that we have a loan for 200, let's say I sold that the next day. Do I have to pay taxes on the 50K or the?
You pay taxes on the profit.
Which is now
the 50K.
200 minus 250 is 50K.
50K.
So we would have reduced our tax footprint even further.
And then check this out. So they give you what is called, they give you like a 1099E or something like that. Well, it's called a Schedule E that we do, right? And basically, like, traveling to and from, cleaning. Like, people sometimes you're buying shit properties that need to be cleaned, landscaped, right? And even though you made the 50K profit, you didn't really make the 50K profit if you're having to invest.
So we could have still expensed and paid nothing.
And we could have expensed mileage.
Right.
We could have expensed.
But again, we took the adventure together because we trusted each other.
Correct.
And I don't think I could have done either one. It
Without
was overwhelming in my head. But knowing that you had both of us, I felt comfortable doing it, and my wife supported it. But it's good to know there were still mistakes that we made that we can learn from in the next project. Correct. And I think that matters, because if you're not breaking down every business decision that you make and looking for the mistakes, I think you're cutting yourself short.
Correct. I had to learn that as I was growing my business. I went from 1 agent to 75 agents in like 2 years. So I really don't even do taxes anymore, just for my private clients that earn a certain amount, right? Because I don't want anybody else to touch those.
I met a woman recently. She's self-made, and it was interesting because she was talking about. I asked her. I said, "What do you do for people that are beginning?" And she said, "Honestly, I don't deal with clients that are earning less than $1 million net." She said, "It's too much of my time with them that if I took time from them to spend on a client that makes $100,000, she goes, I wouldn't have any time for myself." She said, "I do take on one of those people a year," and she goes, "And if they follow my strategy, I guarantee they will make a lot of money." But she also is a CPA. She is a financial planner. She has all of those licenses to do some things that just will blow your head away.
What she probably does is, like, she has agents that handle like the standard files, right?
The minutia.
Yeah, and what I always tell everybody, why sell Chevys when you can sell Lambos?
I get you.
You know what I mean? So, like, because that's my niche. My niche is actually like real estate. My niche is actually, I work with a lot of lenders personally that tell me, hey, like, can you educate this person that they have great credit, but they're only in the books for $40,000 in income. Like, not even God will lend you money at that point. You know what I mean? But I tell them, hey, if you follow this path, yeah, it's going to hurt to report that you made money, but if home ownership is what your main goal is, you got to PTP, you got to pay to play.
Right.
Right? And everybody practices, right? Everybody, nobody, like, everybody nobody really knows how to execute unless everybody over prepares, but they under execute, right? Mm-hmm. And sometimes you have to execute the game plan. Like I'm pretty sure you ran into it as a lender. Like, oh, I make this much money a year, and then you look at your taxes, you're like, bro, you only made like $25K. You got a 700, and you have a 750 credit score, but you only made $25,000. Stop taking those losses. Get into the house, and then we can amend it after you get into the house.
Yeah, that's what I was gonna ask about the amendments, because that's what I had to do as a real estate agent.
Yeah,
I had to file a bunch or claim a bunch up front, and then go back and amend it later.
Yep.
And that's perfectly legal too.
Yeah, it is. And a lot of self-employed people don't know that, because they never get taught that. We don't learn this stuff in schools. Correct.
And they want to claim as low as possible, which makes perfect sense. But we're having to explain this to a lot of people.
Well, that goes something that you and I have talked about. These things, these ideas, these concepts, these strategies aren't taught in high school. They aren't taught in college, because they want you to go work for a company and make somebody else rich.
Correct.
I mean, had I listened to what I was preaching and did what I was taught, I would have become self-employed 20 years ago. Correct.
I just actually paid off my student loans. You know what I mean? Like, it's crazy. They'll lend you $125K to go to college as an 18-year-old, but they won't lend you $125K to start a business.
No.
Like, come on. Like, so, like Luna. He had a story one time. He's like, bro, I didn't finish school because I was in business class, and I asked my professor, how much do you make? And the professor's like $110K a year. And he's like, he walked out. He's like, bro, I need to be talking to people that make $400,000 or $500,000. Like, how many businesses do you own? He told the professor. The professor's like, none. Like, you just mastered the curriculum then. You just mastered the material to teach back to people.
So I couldn't expense foundation repair. I couldn't expense new walls, but what about if I added a bathroom?
That's expensible.
Okay.
No roof. You can't expense. You can't.
Because it's necessary for the structure.
Correct.
Okay, that makes sense.
Correct. So
anything structural.
correct. Yep.
You can't.
A pool. You can't expense a pool.
Can't expense.
However, if that pool is used for your Airbnb, like what you do is you could rent out your pool, right?
Yeah.
There's a verbal.
Yeah.
You could rent out your pools. Actually,
There's a pool app that's
Yeah.
just just for houses.
yeah, bro. We have a friend that she throws her birthday parties every year at, like, she'll rent a pool from somebody, and it'll be a pretty sick pool. You know what I mean? It's nice, but that's a loophole around it. Like, you could rent out your pool because you're gonna get a 1099 for that. You could open up Rick's Pool Rentals, and because you get a 1099 for that, now you can expense the pool.
So I need to build an ADU, rent out the pool, and then build a pickleball court.
Yeah, you play pickleball?
No, but
Okay.
I don't mind making money on it.
And you can rent, like you can
popping
even
right now.
you can
Yeah.
even make it in like and that's another thing. You could if you do something like that, you could do like a party rental. You know what I mean? And because you get a 1099 for that, you could double dip on the expenses for that as well. You know.
Winner, winner, chicken dinner.
Yep.
Really, it sounds like the secret is just opening up those businesses, even getting DBA right, and then being able to funnel the money through there
Correct.
and spend the money through that account.
Get a business account for every DBA you open.
Yeah.
All right. And you don't even need to get an LLC. What an LLC does, it takes the risk off of you. So if somebody sues you, they
Liability.
instead of suing you, they sue the
LLC.
right? And they could only they can't take what you don't make, right? You know what I mean?
Mm-hmm.
So it's really smart it's a good strategy, right? And a lot of people,
Can you open up a DBA online, or do you have to go to the
you
courthouse?
have to go to the courthouse.
Okay.
Because you got to do it as doing business. Well, there's one website that I use. LegalZoom will actually do the DBA and the LLC for you. But the thing is, I like to go to the courthouse and open it up because they give you the letter right there and then with the stamp, and then I just go to my bank and open up the bank account right there that same day.
Oh.
Yeah. It's all in one day. You can
It's
do
all
it
in one day.
quick.
Yep.
The LLC's off LegalZoom. You can probably get it, like, if you expedite it, you can probably get it in
3-4.
like three days or
Yeah.
something like
That's
that.
not that bad.
Yeah, it's
too
not that bad. It's not that bad.
For somebody that doesn't have a lot of time to get down to a courthouse, pay for parking, get in, figure out where to go.
Yep.
Yeah.
And that's the next thing I'm going to do. I'm going to
And-
open up a business in LLC formation.
Just to make LLCs?
Correct.
Nice.
Correct. We just opened up a credit repair division with
Okay.
it's called Reals Financial Advisors. So we teamed up with Dylan Shively from he does a lot of content for realtors as well, but with the James Warren Credit Group. But yeah, we're just about to launch that. We had like a 9-week training for that. So we're just in the systems training, but by the end of the year, I would say we're going to be full blown out doing credit repair as well to offer that to our clients, our tax clients.
That makes sense. It's all related.
Yeah, it's all. We're just trying to become part of the process, you know. Yep,
That's awesome.
yep.
Hey, Brian, when we post these videos, are we able to maybe post his contact info in those videos?
Oh yeah, I plan to. Yeah, absolutely.
Because I think there's so much information that people should be asking. If they're not aware, then ask.
Correct. And you know what? We have so many like resources now that sometimes I don't even know the answer, right? But once I read the answer and I dive in a little bit more, it's just about memorizing answers, right? Because once you go through that scenario that one time
That you weren't aware of.
that you weren't aware of, you already know how to answer the second time, and then you become an expert, right? So it's like we're not going to even know everything. There's probably things I'm pretty sure in real estate that sometimes you're like, oh, dang. And then,
It's funny. I was in my room with the CPA, and we were going through some taxes and doing something. I asked him a question. He got really quiet, and this guy is scary smart. He got really quiet, and he's like, "Damn." He goes,
ChatGPT.
Hold on, and he goes in, and he's going to the IRS. He's reading some of the code, and he goes, "Okay, this is what you need to do." I'm, oh, okay.
yeah, there's so many codes, and like there's times I run into one-off situations, and I use the IRS website and ChatGPT, but what I do is I memorize that answer, so if it ever comes up again, I could walk you step through that scenario, basically. We become solution specialists, basically. So,
What else are you seeing on your list of questions that you think bring a lot of
We already
relevance?
talked about house hacking, right?
Right.
yep,
And your primary residence, and we talked about how the new bill is going to affect that, right?
correct.
Passive income versus active income. You want to talk a little bit about that? How you're being taxed on that?
Yeah, let me pull up my part for that one. Where is it at?
We were going to go in order.
Yeah.
Kind of skipped around a little bit, right? Yeah.
It's just the nature of these conversations. I mean, there's so many things. So let's define what passive income is versus active income. So active income is me going to work, me getting a paycheck, boom.
Earned income.
Right.
Yeah.
I'm getting paid. Passive income is, correct me if I'm wrong, I buy a house and next year it's worth 6% more. That's passive income because I didn't realize that money. I didn't get that money, but it made me money. Right? Am I right or wrong?
So passive income is basically like money that is coming in organically, like every month.
Okay, so maybe not the equity growth
Rental
because that's an
property.
unrealized gain.
Correct.
So then the rental property income would be my passive income.
Correct.
Got
Yes.
it.
Yeah.
Yep. And active income is like you're active as a realtor.
My
and
job.
Your job. That's active income. Active income could either be taxed or untaxed depending on if you're a W-2 or a 1099.
I got a question for you. So tip income, because Ryan has a lot of friends and I have a lot of friends that are in the service industry that do make tips.
Okay.
So for me to take advantage of this tip income deduction, what is the number? 20 grand, 23 grand?
It's $23,500.
Okay.
Yeah.
So for me to be able to claim that $23,500 deduction, if I'm filing the 1040EZ, which is the little one-page tax form.
Do you guys have
I'm
a bar or something? You guys have like a bar?
I have, ownership in a bar.
All right. Well,
And
let's
so-
go take some shots. No,
So if I file the standard deduction and claim whatever that standard deduction is, I can't expense my tips, can I?
tip in cash. You know what I mean? So like basically like a lot of servers, right, or a lot of people in the industry, whenever they get tips, say they get it through their debit card
Or credit card, yeah.
Yeah. So they don't get that until like their next paycheck, right?
Right?
So now they're in the books for those tips. Which if you're trying to buy a house or things like that, that's cool. But a lot of times, like that's why when I go out, I tip cash because I mean,
That person gets it right then and there.
yeah, and I mean, it's up to you to report it or not.
Yeah.
Right.
No, but I'm talking about the deduction, the $23,000 deduction. It only applies to people that are claiming
The
an
tip.
itemized deduction.
Correct.
So if I'm just John Doe, I don't own a home, I don't make any extra claims, and my standard deduction is X, I can't add that tip deduction.
No.
It's
you can't.
only if I itemize.
Correct. And in order to itemize,
You have to
gotta
make over a certain amount.
Yeah, and in order to, so that's why it's important. I think everybody that has a W-2 job should have a DBA.
That's what he was saying earlier. Like it's all about opening
So
up.
say I'm a
those
bartender.
Agreed.
And say I'm a bartender and I make $50K, right? Say I make my $10 an hour plus tips. Right?
$2 an hour.
Yeah, $2 an hour
In
plus.
Texas.
Yeah, what is it, 275 or something?
Something like that, yeah.
215.
215.
Oh,
Dang.
wow, that's a big jump from
Hey,
2.
Give me a 50-cent raise at least. You know what I mean? But you know, so like that's why everybody should have a DBA. Like what I do when I meet with my client, the first thing I tell them is, "What is your goal?"
So you think a bartender should meet with you?
We do taxes for bartenders from everywhere. Yeah, from On the Rocks, from Sirius, right downtown. I really don't go out to bars too much anymore, but 151. You know what I mean?
So if I'm a bartender and I make $50K, let's just say 20 grand is W-2'd, income, hourly income.
Correct.
And let's say 50 grand is tips. So I make a total of 70.
Correct.
And I come to you, what are you going to do for me that's going to bring me value.
Well, first I'm going to ask you, do you have any hobby that you like to do that you've been thinking about making?
I play video games.
Okay, cool. Start a Twitch account and be a gamer.
Yep.
Go buy a freaking $3,000 computer or take it out on credit, right? And that room space that you're operating in, right? You can't do this without Wi-Fi. If you own your house, your homeowner's insurance, if you don't pay your homeowner's insurance, you can't live in your house. Now your mortgage interest is a write-off, right? And that $50,000.
What about my apartment rent?
Your apartment rent, it's your office space because you can't be on Twitch or OnlyFans or anything like that without your apartment unless you're going to do it in your restroom, right? Which I
would want to do.
You can't do it in a public place, you know what I mean?
Yeah.
But everybody should have a DBA.
Wow.
Yeah.
Wow,
even
that's
if
huge.
even if it's making tacos or selling tamales or,
Whatever it is.
I resell shoes online and I work at a call center, right? Yeah, everybody should have a DBA. Everybody has an idea that they wanted to start a business in some form, but they just didn't do it. Well, the first thing to do is pay $25, go to the courthouse and get a DBA.
But if I go to you and you've started this DBA company where you're going to do the work for me, I could literally just call you, pay you, you set up the DBA for me, and you manage my taxes, and then all I get is that letter, and I can go to the bank, open up a business bank account, and now I deposit my tips in there.
Correct. And what I do is because whenever you open up a DBA, you got to show forms of identification. So I just meet them at the courthouse and just guide them, basically.
That's fine.
You know, one of the cheapest DBAs is becoming an ordained minister. You know what I mean? You pay $200, you become an ordained minister, and you could just do a couple weddings for some friends.
You know who did that? Is Phil. He did that for a couple of people at our company.
I'm actually an ordained minister myself.
Are you?
Yeah, I did my best friend's wedding just in July. It was my first wedding, and then we did a little ceremony in Tulum. Well, you know what was an expense for me? My trip to Tulum. Yep.
That makes sense.
Because you have to do the wedding.
Yeah. Yep. And I had to pay for my
you
plane
probably
ticket.
have like 20 bank accounts or some shit.
I can't imagine how many this guy has. That was only last week.
I have more business bank accounts than I have personal accounts.
Yeah.
You know what I mean?
Yeah, I believe that.
But
Because everything could be a potential business that you can funnel money through.
everything is a business.
And then eventually that business loses money. You open up another business.
Even if you rent this podcast studio out to people, it's a business.
Yeah. Everything's a business.
You know what I mean?
I'm always learning something.
Even if I don't have a podcast studio, if I call you one day, hey Ryan, how much will you rent me the podcast studio out for?
Well, that's where you can talk to these guys
wish
because
you
they
was
will
mine to
work it
rent.
out for you.
Yeah.
Yeah.
That's a
Shit.
business. You
That's
know what I
awesome,
mean?
man.
Everything is a business, So
Okay, my brain just popped.
Yeah.
yeah. What do y'all think? Some good gems?
Oh, man.
Some
I
good
mean,
stuff, man. Some good
I
stuff.
think the fact that people that are W-2'd at 18 years old could be starting DBAs and not even realizing that they're saving money, not just for today, but for the rest of their lives.
Correct.
Once you get it down, man, you know it.
Correct. And the only and there comes a point where you're gonna want to buy a house or make some business moves, and you got to report credit. You got to report your income, right? But we'll cross that bridge whenever it comes.
It's funny you say that. I remember when I first got into the business, it was probably, maybe 2013. This man walks in, and he was a taxi driver. And taxi drivers are self-employed. And he said, hey, man, I came in here a couple of years ago. They said I didn't make any money, that I had to report my income. He goes, I reported my income for 2 years. Oh, my gosh.
They make money.
Yes, he makes a lot of money. And they had coached him on where to put deductions that we could add back in, like
Correct.
mileage. We can add back that.
Depreciation on your vehicles. Yep.
You know, he had to buy a vehicle, and we were able to add that back.
It's that line 31, right?
I don't.
But yeah, so for example, I work with a lot of lenders, right? So say for example, you make $100,000, right? And you're gonna owe $15,000 to the IRS, right? Whenever I depreciate mileage in your vehicle, they basically say they give you $20,000 in depreciation. They add that back in
Yeah.
to it.
I can add that depreciation directly back as
That's
income.
line 31. Actually, a really good friend of mine, Arnold French, taught me that I don't know if you heard of Arnold French. I think he used to be like the VP or the president of NAREP. But he taught me that, like, you know, he's like, bro, they don't have to owe this much if they're gonna buy a house. We'll just add it right back in.
Correct, because we would count that as income.
As income.
Yeah.
Yep.
Yeah, that's awesome right there.
Yeah, bro, it's crazy.
So you can do that on mileage and depreciation on the vehicle?
I mean, here's another hack, right? You're a W-2, right?
Mm-hmm.
Or you're a 1099 realtor, right? Download the Lyft or mobile app or DoorDash app. Do a couple trips. Do like 10, 15 trips throughout the year. That goes under, what is it called? Like taxi or what is it called?
Transportation service.
Transportation service. And now it's a write-off. You know, now you could depreciate your car, your mileage. Like,
yeah, but I don't want anybody in my car.
yeah, neither do I. Or I don't want food in my car either. You know what I mean? Like,
that's awesome though.
But yeah,
man.
but that's a hack right there.
Hack,
you
man.
know, like, and the thing is,
Well, this is a hack, especially for people. Look, at 54 years old, I have a lot of friends that are in that 20 to 35 range, and they want to do more, but we just don't know. We don't know the tax rules. We don't know how to do this, but we're doing things that are making money, or playing video games, or, hey, what if I just got a Lyft? And now I just bought a car and I can barely afford my car, but now I get to expense it.
correct.
Or what about renting it out like Toro?
That's I was just talking to somebody about that like a couple months ago. I was like, bro, I'm gonna lease out or lease out like 12 Toyota Camrys.
Well, it's funny. I was going to rent out. I had a GT500, that Shelby, and I just for just to be silly, I listed it. Holy cow! Some guy offered me like $2,000 for an hour.
Yeah,
Jesus.
we went.
I'm
to,
like, I wouldn't have a car after that, but
yeah, we went to PA and rented out a Sprinter van. We went and we took that Sprinter van from Philly to New York because we took like 8 of our family members, and we paid like $2,300 just for like 4 days. You know what I mean? And,
that's hard.
And with Turo, they don't need a lot of people do it because like there's a lot of people in scenarios like, hey, I don't want to put my credit card on the line. You could pay with the debit card. You know what I mean? Or sometimes it's just cheap. Sometimes car rental places don't have Sprinter vans available.
Yeah.
But Turo does. You know what I mean? So it's and like, you know,
As I start to download Turo.
even if you have cars laying around your house that you don't use, you could generate income from those cars.
Yeah.
You know what I mean?
And there's a lot of people I feel like that are trying to pick up these side gigs and other jobs, and they may include Uber or Lyft or whatnot. So
Yeah.
they should be opening up a business account for something like that.
Correct.
Right?
Well,
correct.
there's a lot of people that are struggling. Everything is a little more expensive every day, whether it's food prices, whether it's gasoline prices, whether it's your rent. I mean, in some areas it's going down, in some areas it's going up. But at the end of the day, what we're taking home and helping our kids or our family is less and less. It feels less and less. And if these are opportunities that people can use to pay less taxes and keep more money, then they should all be doing it.
Yeah. You go to Bill Miller's and for 2 people, you're paying like $32, you know?
Yeah.
And trust me, you got to get the double meat, because right now the Bill Miller's meat's like 4 pieces. It's like, what happened?
Yeah. I
I'm
had
eating
an
more
extra-
bread than I
yeah.
eat meat.
They reduced
For sure.
everything.
For sure.
Hey, you're thinking about food, huh?
I'm thinking about food, bro. I'm starting to shake.
You brought up Bill Miller.
Yeah, I'm like, damn, Bill Miller sounds good.
We've been here, what, an hour, hour and a half?
Yeah, I've been here for a while. Couple more questions that I just want to ask. I thought they were pretty good. It's some common mistakes that real estate investors make, you know, before they come to you, because I'm sure you're going to ask them, hey, you know, what have you been doing so far? Who have you been talking to? You know, how much money have you been making? What are the biggest mistakes you're seeing that investors are making or people in business are making?
Not tracking their mileage, not, you know, a lot of people think the cleaning lady's not an expense. It's an expense.
Tracking everything, right?
Tracking everything. So that app Stride, you can literally take a picture of your receipt and it'll categorize it for you. You know what I mean?
That's cool. Is that a free app or?
It's a free app.
Okay, cool.
Yeah.
Stride.
One of the biggest mistakes that I see that they make is not expensing the use of their home as well. You know what I mean? A lot of them don't. You know, a lot of when you're real estate, you're straight like self-employed, right? So a lot of them don't even expense their mortgage interest. You know, they think they get that 1098 INT form, and they just think it's just to report it. Yeah, the IRS wants to know if you're a homeowner, but because you can't. Sometimes you have to take your work home. If you don't pay your mortgage interest, you can't live in your house. If you don't pay your mortgage, that's rent as well, basically,
Yeah.
for your office space. You know what I mean? There's a lot of things that real estate investors miss. What the biggest thing is the bonus depreciation. You know, they fail to report any of their contract labor for like cabinets and stuff like that. The landscaping, the adding the concrete to the backyard.
You know, it goes back to that one investor that you're working with that overspent with windows and some other things.
Oh, he did.
And what we can do is, connect him.
Yeah.
Oh, for sure.
Yeah.
Yeah.
Yeah, he's
I'll be
definitely
more-
taking a loss on that one.
Yeah.
I'll be more than happy to help out anybody once I see the numbers, I'll crunch them for him. You know what I mean?
I bet you can really benefit the flippers, on that side, because I feel like there's a lot that
There's a lot of minutia that you don't even think about.
there's a lot of stuff that they don't know, and they're getting tax heavy on those
Correct.
short-term capital gains, right? Versus like a rental property or Airbnb.
And the margins are a lot tighter than they were
especially now, yeah.
6 years ago.
Mhm.
You know, and you can even say you're gonna do a flip, right? And you fix it up. You could rent it out for 1 month and then flip it. You know what I mean? So that way you could get it as a rental and you could get it as a flip, and you could double dip in those losses as well. You
So
know?
it won't be considered short-term capital gains?
Well, it's only a short-term capital gain once you sell it, and the profit, the bottom line that you're
Okay.
gonna make.
And then I would tell you before you do that, do the cash out refi on that one
Yeah.
and reduce your
How
your
does that
earnings.
help you, though, rent it out for a month? Can you explain that?
Well, say for example you rent it out for a month, right? So once you got the LLC for the rental,
Oh, you have a different LLC for the rental.
You have a different business.
you have a different business. Now you can take another loss. You know what I mean?
Yeah.
So
Okay. I
you
see
just got to
that.
track your businesses, bro. Like honestly, if you're in real estate, you should have at least 3 or 4 LLCs. You know, one for the rental side, one for the Airbnb
It's a lot of
side.
paperwork.
You know,
Well,
or at
that's why you
least-
pay somebody for it.
Yeah.
or at least a DBA for each one.
Yeah.
You know what I mean? Like
Just save everything.
Or one of my guys, my CPA, he told me, he goes, look, for whatever DBAs we set up, have a separate card just for that.
correct.
Yeah.
Now,
that's a good idea.
do I listen? Should I listen? Will I listen after this conversation? Yes.
Maybe a little bit more.
Because I need to.
Every DBA
it's-
should have its own debit card, right?
That's good to know. That's
Yeah.
good to know.
So that way, you know,
You can spend the money.
and I'm telling you, like the IRS, I've done over 10,000 returns in my lifetime, and probably only been audited like 3 times. And it's because a customer forgot to give me a W-2 or 1099. And they know. They
They omitted something.
Like, what do they say?
Oops.
Buyers are liars, right? So,
Oh, yeah.
they know.
You mean I was supposed to give you that 1099 for $100,000?
Yeah.
What happened there?
Yeah. Oh, I owe 12,000. What did you do? Let me read the letter. Oh, I forgot. You didn't
Ah,
include
yeah.
your retirement statement from the money you withdrew from your 401k. You know, so it's
Okay, so a couple more I wanna tackle before we get out of here. Is there anything that you would recommend that like these investors look at before the end of the year is up, just as far as taxes or something they should do or something they should be proactive about?
So I wouldn't wait till the end of the year. I'd probably do it like latest October. You know what I mean? Like just kind of
Start
The
getting
sooner the better.
Yeah,
That's what I'm
everything
hearing.
like
in
have your
order.
books in order, right?
That reminds me, I've been procrastinating, but because I need to go ahead on my business, I need to go in and it's already middle of the year. I got to do all my
We
expenses.
do
that I-
bookkeeping at our business too.
And I need
problem
to,
with that.
whether it's all of the CRMs that are using, some of my licensing fees,
Yeah.
my mileage, my time, all of that, I need to start putting in a book so that when I do give it to my guy,
Yeah.
It's good to
I'm
go.
not giving him just, I think I did this, I think
Correct.
I spent that.
What do you
Yeah.
charge for bookkeeping?
It all depends on your scenario, you know.
Gotcha.
So it all depends.
Sounds
on
like
your
it's
scenario.
worth a conversation.
Yeah.
How many hours? Yeah.
Most definitely. And but yeah, like start like don't wait till December. Like don't wait till January 24th when tax season opens to
Call your tax guy?
Call your tax guy.
Yeah.
You know, start in October, start looking at where you're at. And that's how you're gonna know, man, do I need to spend more money on my business? Do I need to do this? Do I need to do that?
What I'm hearing is that anybody listening to this podcast should call you and open up a DBA no matter what they do.
No
because
matter
I
what you
guarantee
do.
there's a way that they can expense some of their income out.
Yes, and that's legally doing it, you know, because there's a lot of tax professionals that just add a Schedule C without you having a DBA.
Oh, God.
And
That's scary.
God forbid the IRS like looks at your file, right? And like I said, only 4%.
Well, that's when you can get in trouble. Huh?
And you know what? Like, and there's people that have a business, but they don't know the legal part. So a lot of times they don't have a DBA. But as long as they tell you, hey, I did have a business selling tamales or like car washing cars, then as long as they give you that dialect, now you can tell them, well, go get a DBA. You know what I mean?
Make it official with a bank
Make it
account.
official with the bank. So you don't even have to have the DBA, but as long as the dialect comes from them. But there's a lot of people that do it without the clients knowing, and that's when it becomes an issue.
And this is also good, like to talk to you before the end of the year, like in October, like you said, because anybody who has maybe employees or subcontractors that they need to pay out, they're going to need to know that when it comes to, you know, the beginning of the year.
We can start doing the 1099 forms ahead of time, so that way, and then by looking at your scenario, I'm gonna know whether you need an extension or not, because I'm gonna look and see, like, man, you don't got all your stuff ready. Let's give you an extension. The extension gives you till October 15th to do your file. Yeah,
because I 1099 my loan assistant, and then my processor is actually paid out of the loan, so I don't have to 1099 that.
Yeah.
But these are things that we should all be
1099 everybody. You could 1099 your landscaper too.
Yeah.
Yeah.
Hell yeah, you could.
I 1099 my wife.
She's like, yes, I know.
Yeah.
Okay, so last question I got for you. So if you were to start a business right now, what are some of the tax strategies you would use in the beginning? And I think I already know the answer to this question, but it's just something that I wanted to ask. Like, what are you commonly seeing with some of your most wealthiest clients right now as far as tax strategy goes?
Is they're keeping all their money in one business and all their deductions in one business, right? It comes to a certain point where, and the thing is, like, you got to ask your client, like, what is your goal? Is your goal to report that you make money? Now, if it goes to report that you make money, you got to pay the tax liability to be in the books.
Why do you want to report money? Because you want to be able to legally be able to buy a house with a traditional mortgage.
Yeah, I want to open up, $1 million credit lines, or I want to buy XYZ amount of house, right? It's knowing what the main goal is. Is your goal for your business to report that it's making this much money, or is your goal for you not to owe a lot to the IRS? It's knowing what direction you want your business is. Are you just opening up a business to take losses? Are you opening up a business because you really want to do this, basically? And if you're going to open up a business, I always tell everybody, talk to a CPA, a tax strategist first. Let them know, like, what the idea of the business is. A lot of people just go and open up a business, and they don't consult with somebody that pay the $200, $300 for the consultation. So that way you know how to form that business correctly. So
what I'm hearing is the strategy is to build a plan, not run with an idea.
Correct.
A plan is a strategy that you've helped somebody that tailored to them.
Correct. Because there's people that are just going to go into business and be a sole business owner, right? But there's people that are W-2 and they're going to open up a business, and you're like, well, let me see what your year to date is. If you open up this business and you take this much of a loss, this is how much you're going to owe or get back, right? A lot of people just want to go and open up businesses without having the financial plan or the business plan in place. You know what I mean?
Yeah.
So
they just want to get in the game. So
they just want to get in the game.
They do whatever they have to do, right, to get there.
Yep.
Cool, man. Well, Jose, it's been great talking to you. I think we've been here for like an hour and a half now or something like that. Yeah.
It went by fast.
It went by super fast. But I really appreciate it, man. I feel like I learned a lot. I know Carlos did.
For sure.
I feel like our viewers are going to learn a lot. We'll definitely give out your information. So anybody who wants Jose's information, I'll have it down below and everything I share. Okay. Also on YouTube. Anything you wanna lead off with?
If anyone is interested in becoming a tax agent, a licensed tax agent, we throw a 3-day course. It costs $1,250. our average tax agent made anywhere from 30 to 45,000 in 3 months during
Wow.
tax season.
Wow.
And this is a qualified side hustle. So if you're a W-2, you don't have to leave your actual job. You could do this on the side. And we have so many organic leads that right now we just need SON, strength of numbers. And we're going to be launching our course in October. It's literally a 3-day course. We help you get licensed. We train you on the tax laws. We teach you how to do a business file, a personal file. So if anybody's interested in making money while they're sitting in the comfort of their home, let us know. If anybody needs help, we could file back up to 5 years of taxes as well. So
I didn't know that was possible.
I didn't either.
Yeah, so we can
I thought it
definitely.
was 3 years.
Yeah, we could file. Our systems let us go back up to 6 years. You can only collect money on 3 years.
Gotcha. Okay.
Yeah,
Oh,
but
amending, right? Yeah.
yeah, amended. So if anybody needs anything, 210-779-6363. Follow me on Facebook, Jose Rios, Rios Tax and Insurance Services. Follow me on Instagram, J Rios Insurance 23. And if you need help with anything, we got you like a mom has her newborn. I promise.
I like that. All right, guys. Well, thanks for tuning in. We'll see you next time.
Thank you.
Awesome.
Cool.
Awesome. What do y'all think?